The World in One Fund, a comprehensive guide to Vanguard Total International Stock ETF, VXUS. As of February 5, 2026, the Vanguard Total International Stock ETF, ticker VXUS, has become one of the most significant tools for investors seeking to move away from U.S. concentration risk. For over a decade, the S&P 500 led the world in returns, but early 2026 has seen a major tactical pivot. Record inflows of over $6.2 billion in January alone suggest that investors are finally looking across the oceans to find value. For an investor today, VXUS is the ultimate diversifier. It doesn't just buy a few big foreign names, it buys practically everything outside the United States. With 8,600 plus companies in its portfolio, it offers a single-click solution for owning the global economy. This guide breaks down the all-cap strategy, the 2026 valuation gap, the currency risks, and why this fund is the cornerstone of a total world investment philosophy. 1. What is VXUS, the everything but the US blueprint? VXUS is designed to track the FTSE Global All Cap ex-US index. To understand the power of this fund, you have to look at its all-cap nature. The three pillars of coverage. Ex-US only. As the name implies, VXUS excludes all American companies. It is designed to be the perfect puzzle piece to fit alongside a US total market fund, like VTI. Developed markets. Roughly 75% of the fund is invested in mature economies like Japan, the United Kingdom, Canada, and France. These provide stability and reliable dividends. Emerging markets. Unlike many international funds that play it safe, VXUS allocates about 25% of its assets to developing nations like China, India, and Taiwan. This provides the growth engine that can potentially outperform during global economic booms. 2. The 2026 rotation. Why international is winning now? If you are looking at VXUS in early 2026, you are seeing a performance shift that hasn't happened in years. In January 2026, VXUS outperformed the S&P 500 as the Sell America trade gained momentum. The valuation gap. The primary driver for VXUS in 2026 is relative value. U.S. markets. Trading at a price-to-earnings ratio of 23x, the U.S. market is considered expensive by historical standards. International markets. VXUS is trading at a price-to-earnings ratio of approximately 14.7x. This means you are paying significantly less for every dollar of profit earned by international companies than you are for U.S. companies. Forecasted returns. The 2026 Vanguard Economic Outlook suggests that non-U.S. stocks could deliver annualized returns of 4.9% to 6.9% over the next decade, potentially outpacing the lower forecasts for the U.S. market. 3. The top holdings. Global giants you already know. While the fund holds over 8,600 stocks, its top holdings are dominated by the most innovative and essential companies on the planet. Taiwan Semiconductor, TSMC, the world's leading chip manufacturer and a critical player in the 2026 AI revolution. ASML Holding, Netherlands, the only company in the world capable of making the machines that produce the most advanced microchips. Novo Nordisk, Denmark, the healthcare giant behind the world-changing weight loss and diabetes drugs. Nestlé, Switzerland, the ultimate consumer staple defensive play. Tencent and Alibaba, China, the massive internet conglomerates driving the digital economy in Asia. The diversification benefit. Because the fund is market cap weighted across so many stocks, even its largest holding, TSMC, only accounts for about 3% of the fund. In contrast, a single U.S. stock like Apple or Microsoft can make up 7% or more of the S&P 500. VXUS is much more resilient against a single stock disaster. 4. Cost and efficiency. The Vanguard advantage. In 2026, the cost of international investing has plummeted, and VXUS is at the forefront of this trend. Key statistics as of February 5, 2026. Expense ratio, 0.05%. This is extraordinarily low. You pay just $5 per year for every $10,000 invested. For comparison, many active international funds charge 1%, $100 per year. Dividend yield, 3%. International companies generally pay out a higher percentage of their earnings as dividends than U.S. tech companies. This makes VXUS a strong choice for those seeking quarterly income. Assets under management, AUM. With over $570 billion in the total fund strategy, VXUS is highly liquid and widely trusted by institutional advisors.
5. VXUS VEA versus VWO. Which one to choose? Vanguard offers 3 main ways to play international markets, and picking the right one is essential for your strategy. VEA, developed markets, only buy safe, mature countries. Use this if you want to avoid the volatility of China or India. VWO, emerging markets, only buys high-growth, high-risk developing nations. Use this if you are young and want maximum growth potential. VXUS, total international. This is VEA plus VWO. It is the easy button. If you don't want to spend time rebalancing between developed and emerging countries, VXUS does it for you automatically. 6. Critical risks, the foreign factors. Investing in VXUS isn't all upside. There are 3 specific risks that can hurt your returns in 2026. Currency risk, the dollar trade. This is the most misunderstood risk. VXUS does not hedge its currency. If the US dollar gets stronger, the value of your international stocks held in euros, yen, etc. goes down when converted back to dollars. However, in early 2026, the Sell America trade has weakened the dollar, giving VXUS an extra boost. Geopolitical sensitivity. War in Europe, tensions in the Taiwan Strait, or regulatory crackdowns in China have a direct impact on VXUS. Because the fund is so broad, it is always exposed to the world's flashpoints. Accounting standards. While the big names in VXUS follow strict rules, some of the 8,000 plus smaller companies in emerging markets may have weaker financial oversight than US companies. 7. Strategic implementation. How much is enough? In 2026, most financial advisors suggest an international allocation of 20 to 40% of your total stock portfolio. For the aggressive investor, a 40% VXUS, 60% VTI split provides a true total world weighting, matching the actual size of the global stock market. For the conservative investor, a 20% VXUS, 80% VTI split provides enough diversification to protect you from a US market crash without making your portfolio too volatile. The home country bias. Americans tend to own too many US stocks. VXUS is the cure for this bias, ensuring that you own a piece of the next great innovations, regardless of where they are invented. Conclusion: owning the global recovery. The Vanguard Total International Stock ETF, VXUS, enters 2026 as a uniquely powerful asset. It offers high diversification, a record low cost of 0.05%, and a significant valuation advantage over a crowded US stock market. While it carries risks related to currency and global politics, it remains the simplest way to capture the growth of the other 96% of the world's population. The verdict: if you believe that the US cannot lead the world forever, and you want to participate in the growth of Europe, Asia, and Canada at the lowest possible cost, VXUS is a must-have core holding.